So we're looking to get short here.
Order filled.
Selling below. Let me get my stop in the right place. So we're basically selling below here. My idea is that the bulls, they've had all this buying through here, this strong bar here. Really didn't get much follow through. They had the second attempt up here, and they had several smaller attempts through here, and now we're back below the moving average. And we can see we had push up and a second push up, and now we've gone below here. And so where I was actually selling was below this bar. I was trying to sell below this bar, but our entry bar ended up going above first, and then it went below in the last minute of the bar there. So that's okay. You can still leave the trade on in that situation, even though it went above this bar first. So the bulls are trying to create a wedge bottom here with 3 pushes down through here. First push, second push, third push. So if they get a bull bar, I'll be getting out above it. If not, if they're unable to create a bottom here, market should be able to head lower. This is really the first trade that I've thought of today. And on the open, if you look at the open, it's actually looked fairly similar to yesterday. So we had a move down. We had a move down here, a few bars up. We had a few bars up here, a few bars down, even stronger here. Went below the first bar. We did that here. Then we had a strong move up, and we had a strong move up here. Oftentimes you will see the market do that, like the yesterday will have the same kind of patterns as the current day. So if it's going to continue following yesterday ended up trending up until the end. So if it's going to continue that, then we would expect the rest of the day to continue up from here. So if we do get signs of a reasonable bottom, then I will want to be getting out. So like if this bar closes near its high, I'll go ahead and get out above that bar.
Stop filled.
So a lot of the times I will manage my trade like that if I see a reasonable reversal happening, like this. We're talking about this wedge bottom, strong looking bull bar. Then it's better to just go ahead and get out instead of letting your stop get hit. At least according to the data that I've collected on my trades, when I see a reasonable exit point, then I go ahead and exit, and I save a couple of points instead of getting stopped out at the stopped out up here. All right, so we are making another attempt here. Kind of a similar story to why we're taking this short trade over here. Bulls have made these attempts go higher, and now they're below the moving average, and we're getting a decent bear bar. This is also a second entry long that would fail if it goes below this bar. So first entry long here, second entry long. So the bull's been buying above these bars, and if the market starts to go lower here, they'll probably go ahead and just take their loss and get out. Targets below are the open of the day, and potentially later the low of the day. Another way to look at it would be head and shoulders top, left shoulder, head, right shoulder, and potential for the market to break down lower here. So how I do these scalps, I always put my stop right above the signal bar, and then I'm basically going for 5 points. How other people will do their stop placement is they'll put their stop over the swing high. So if someone's shorting through here and they're betting the market is going to go down, they would put their stop above basically the high of the day here. And then as the market makes new lows, then they would move their stop from here to then to here, and they would basically trail their stop down like that. But when I'm doing these scalps, I prefer to just go ahead and put my stop above the signal bar and just keep the trade simple. So if the open of the day is a target, why am I not putting my stop order at the open, oftentimes it will go ahead and go a little bit past the open. So even though the open acts as a support, and it's one place where people will buy and get out of their shorts, oftentimes, I'd say most of the time actually goes a little bit past it. If it doesn't, what you will see sometimes is the market will come right down to it. We'll have like a tail that comes down to it and tests the open, and then it shoots back up. In either scenario, if it gets down here, I'm at least able to get out with a few ticks of profit. But usually it does go a little bit past, which is why I'm okay with keeping my target at 5 points. So market's going a little bit lower here. We're running into our first real support here, which is these lows. Now, I'm not too concerned about these. I think some people will buy below that for a scalp. They'll buy below this low and try to get a couple points or try to get 5 points. Usually, they will have to buy lower first and then have the market come back up before they can actually get out. These scalp trades here usually don't seem to actually work out immediately. However, if someone can buy more lower and scale in and use a wide stop, then they're usually fine. But usually these trades don't work out initially. So in that case, if someone was thinking about buying these lows, I think I would rather wait and buy somewhere down here. So instead of having to buy here and then buy more lower, then you're just go ahead and taking the second trade, you're taking the better buy down here. So if someone was doing those limit order scalps like that with plans to scale in, I would just wait and take the second buy down here. And then your risk is going to be less. And, there'd be more people buying with you down here because then you'd be at lower in what the larger trading range is. So if we go below this low, I'll go ahead and move my stop a couple ticks, couple ticks past break even here. It's pretty close to where I would move my stop down. Not quite far enough, but if we get below that low, I'll go ahead and move it down. All right, so move it down. Or at least we get a little bit out of the trade. Testing. When it's testing my order like this, I go ahead and move it pretty close. So you can see it touched it, but...
Stop filled.
All right, so anytime it's basically touching my order like that, I'll go ahead and just move it straight down. And you can see, even if we move right back up from here, it still went a little bit below this open. We still went about 6 or 7 ticks or so below that open. So usually, right, like I was saying, like buyers below here have to buy more lower, and then it often does go below this open a little bit. So if I had stayed in the position, I probably would have gotten out above this bull bar. Once again, wedge pattern, 3 pushes down, good looking bull bar. After it had tested the open already, so I think that'd be reasonable to be getting out above that bull bar. And like I was saying, when the market is basically touching my limit order like it was down here, that's when I go ahead and just move my stop order all the way down. Normally I move it even closer. I got stopped out, probably lost out on 3 or 4 ticks. Normally I go ahead and just basically move it down, basically right at it. But so right when it's touching it, I go ahead and just move my stop basically all the way down. So I was considering selling below this bar. I'm going to avoid it because now we're starting to get more in the middle of the day, and you want to avoid trying to take trades in the middle of the trading range. The shorts through here, these were coming off of failures on the upside, right? So we've already failed to go long up here, and this is sort of setting up as a failure of the bulls. But I think that trade's already happened. It's already occurred up here. The bulls are trying to go up and then they failed. That's what made these trades here good. Now we're more sort of in the middle of the day, and also what's happening is potentially this is a failed breakout below these lows through here. So we have these lows. Then potentially now this is a failed breakout below this low. So with this being in the middle of the day and with this possibly being a failed breakout below, I'd rather avoid trying to get short here. I think the signal bar looks good. You know, I like how it's below the moving average. It's a pullback. It's a pullback off of this move down. So I like all that, but I'd rather not be trying to take a trade, you know, directly in the middle of the day. So this bar is a similar situation to this bear bar that I was talking about here. It looks like a reasonable short. It'd probably be okay to do. I don't like how there's been so much overlap here, though. You know, I mean, you could argue that the bulls have made these 3 attempts up and they're all failing. And now we're getting this strong signal bar. You could argue that, and some people, you know, might take that. I think I'm just going to wait. We're right in the middle of the day, right in the middle of the trading range day, and you know, this could make a move down, but this still has the potential to just move down and actually fail down here, and then go up higher. So much overlap. I'll just go ahead and wait. I think a good rule of thumb, anytime you see this, you know, these sideways bars like this, multiple overlapping bars, tails, the bodies are overlapping, then just you know, just wait, just give it a little bit of time and let it break out one way or the other first, because you can really get torn up a lot through here trying to trade this. Even if some of these signal bars are looking good for a short, it's better to just, in my opinion, it's better to just wait. So I was away from my computer for about an hour, didn't take any trades during this. Looking at it now in hindsight, to me this is like a good bar to sell below. I'll go ahead and mark it. So we're starting to get away from this sideways movement, and now we're breaking out below it, and then our target is down here, the low of the day, which is where we got to. So if I was looking at this bar, I'd be interested in getting short below that. So I felt like showing more of a full day of trading. Really didn't have any trades that I liked on the open, but you know, normally around, you know, somewhere around 1 or 2 o'clock, there's usually a good trade. Usually like a good reversal set up around either a reversal or a continuation sets up around 1 or 2 o'clock. So I like to be trading those. That'd be kind of like be one of these trades here. So if you guys liked this video, let me know, and I could do some more of these in the future where I kind of show more of a whole day of trades and explanations, and I could definitely do that if you guys are interested. So you can see I normally don't have that many trades, really. I mean, you know, today we're looking at maybe 2 or 3 trades, and you know, yesterday had like 6 trades that I have marked, and you know, 6 would probably be on the higher end of how many trades I would take. So you know, looking somewhere in the range of like 0 to 1 trades up to, you know, 6 or 7 maybe on the high end. So not that many trades. It's unlike maybe what some people have in their minds of people taking like 20, 30, 100 trades a day, getting in and out constantly. And really what I'm doing is just looking for kind of some key setups throughout the day and taking those. And today this was our cumulative was, so between our loss and our winning trade, this is what we were able to pull today. So yeah, if you guys want to see more of this, like it and subscribe, and I'll be happy to make more. So see you guys next time.